The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this day before July 4th holiday. Here we are on the 3rd. Everything said should be a fabulous rally to the upside. In a bear phase, rallies fail. In a bull phase, every single opportunity pushes the market higher. We'll see what happens here. What we're really looking at is just the take of this E-mini that I'm showing you right now. On the left side chart is the daily chart. There's a 200-period moving average way down at 2667. Don't even have to look at it right now. It's getting close in the last couple of days, but we are now 2729, so we are over 60 points higher. All right, that's really important. But what's very important about this particular pattern is we're making lower lows and lower highs. The 9-period moving average, that's the little pink line right there, it's been impossible to close above it. We've managed to tag the 14-period exponential moving average, which is at 2738, many times over the last week, and just it's like a repellent zone. As the price gets there, boom, it reverses, and that happened again today. The E-mini is up at $2 at 27.29. Earlier on, it was at 27. Did it hit 27.41? Yep, 27.41.50. This is very interesting because the weekly chart now is starting to show some signs of wear and tear. If there was a really good rally and that we've only got 40 minutes to go now because it's a short day, closing at 1 o'clock. It's unusual for me to be ending the day right here, but this is the end of the day, last hour, last 40 minutes, 50 minutes. What we're really looking at is that weekly chart. MACD deflected lower, but we're only not even into the midweek yet, but it has deflected lower so far. And the stochastics at 81%, really close to going under 80%. The 120-minute chart has made a peak D. You remember how important in the Chapman methodology, peak D is really important. The fourth highest peak, 2748 round number high on the 27th, pulls back down to 2693, starts a rally, goes to a peak C minus, because it failed, and that failure was right at exactly on the 200-period moving average, the little orangey line right there, 27.45.50, comes down very sharply to the 2690s, and then what does it do? It has a really good rally into this morning, and then boom, at 27.40.60, 200-period moving average starts working its magic, and boom, 27.41.50 is the high. We've made a peak D testing the 9-period moving average. That's that black line. Oops, that's the 14-period exponential moving average. MACD is still quite good. Stochastic's gone to 84% and turning down. We're going to have to watch what's happening here. I'm going to get out of this, and I want to, because we've got a day off from the markets. Let's do a couple of things right now. I had a bunch of really good questions. I want to deal with those questions. But I also want to run the numbers to show you what's so fascinating about this market. Look, in the Dow, there was a rally above the 9-period moving average. That's that red line, that little pinky red line, 24,377. It runs towards the 14-period moving average of 24,474. Can't make it. It failed. It's now only up 12 at 24,318. After weeks, since the sell signal we had the day after leg D was made, we got the peak D where we went short. We had we switched to the short position in the Dow. 25,402 was the high on the 12th. Now we are trading at 24,323, 1,000 points lower, and there hasn't been a rally. There's been 1, 2, 3, 4, 5. About 5 or 6 attempts at rallies that have failed. Not good. The MACD is flattening out, but it's still very negative. Stochastic's still under 20% at 18%. it has to get into the 23, 25% area for a rally to be able to sustain itself. We've got the lowercase h going to lowercase m in the weekly chart. Hey, the week's not over. I'm not going to discuss it as if today was Friday. It's not. It's Tuesday. So we've got 2 full days to go after this. And the monthly chart hasn't given, I haven't yet been able to put a down arrow, although everything about it says it should. But this MACD is starting to cross negative. Stochastics at 62% in the monthly chart. That's not good. Let me just run the numbers here. SPX is, it was up quite nicely. Not great, but it was up. Now it's down 40 cents. Hit the 14-period exponential moving average, pulling back sharply. Not a great sign. That H to M pattern in the weekly chart is still okay. It's not bad, but the stochastic is at 82%, which is just barely strong. And the MACD is, well, we got a few days to go. So it's just turning down, but it hasn't crossed negative. Monthly chart is not bad. It's the QQQ. Look at this. You would expect that the Qs, having been leaders all the way up to the 177.98 high on the 20th of June, could manage to have a decent rally. Nice green candle yesterday. Had to try to follow through. Now it's down 1.07 at 171.73. And what I've been discussing for some time is that the leaders, we've got to look at the leaders now as potential candidates to be the laggards. And the weekly chart is still very good, but we'll have to wait until Friday. And the monthly chart, of course, as I said, is very good. It's this daily that's going to be so important. IWM trading up 30 cents, 165, actually showing a little more strength. Why? Because it did test the 9 and the 14-period moving averages. Hasn't held it, but it's still up 31 cents at 165.21. I'm afraid to say that the MACD is turning down sharply in the daily. Stochastics at 22%, but it hasn't been a spectacular bounce. It's been a kind of an okay bounce, one that one would expect. Most importantly, if the IWM Russell 2000 trades by Friday's close under 163.50, or certainly quite a bit under 163.50, but under 163.50 will be a hint to say, no, failure pattern. It's not leading anymore. For subscribers to my opening call, we did short the very high. I mean, we must have got really close to the top tick in the vehicle that we shorted, because we shorted before the opening, the day that it made its 170.20 high. It had 170.08 Chapman wave 2-bar reversal the following day for peak E. Before the opening, when the IWM was still rallying, that's where we put the short position in the TZA. I don't know if it's going to be great or not. All I'm saying was that gives us the best opportunity to be able to, as we've done, take some profits. We've still kept a core position, quite a big core position. And I'm just saying, let's see what happens here, because it's so young in the life span of the iShares Russell 2000, having been just, even if you go from February of 2016 and 93.64, just been a spectacular run. Do you think it's going to end just boom like that? It doesn't happen. It's going to put up a bit of a fight before it goes down lower. But anyway, it was good to get into that position. Gives us a bit of a cushion, because to go to an all-time high from here, I think is going to be really tough. It needs much more time and a lot of building of momentum. We'll see what happens. I'll be right back. Dow's down 14. Now it's down. S&P's down 2. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank Bank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So here are a couple of things that I want to talk about. For the Dow to have given up the potential of already, now I have a technique. Yesterday flashed a signal. I discussed it during the show. I said I have a Chapman Wave trend gauge flashing. I could have made this a black box. I didn't have to discuss it ever. In fact, all these techniques I never really had to discuss. But I love education. I'm beginning to think now that I've got to make this a summer of education, at least for my subscribers. We're going to use this to really learn about different techniques, how they succeed, when they fail, what to look for when they fail, etc. That's the way I'm beginning to think of this, because it has to become one of the most constructive summers we've had in a long time because of the choppy sideways to down action that I'm anticipating for at least this first part of the summer, at least halfway through the summer. Meantime, the IWM can't carry it alone, and it's only having a kind of a relief rally. So the signal I had yesterday said that within 2 days, within 2 sessions, there should be a 9 to 11 point rally in the E-mini futures, and that should help the cash S&P index to rally before it reverts back to whatever it's going to be doing. And now we can see how beautifully that worked. We had this very sharp gain early on and failure. This is very important because it's debilitating. It is frustrating to those who are bulls. It is. I didn't mind this morning we had 3 new positions on. I really thought seriously about it. One was a stock we've missed a lot. It looks like it's making a weekly and a monthly turnaround to the downside. But I thought, what a nice attempt if we could get it with a really 1.2% stop or something. Well, we bought it this morning and it just immediately gapped down. So we're out, although it's holding quite nicely. I'm done. It was an experiment. I'm probably going to do it at least another 2 times. The third time, I think, is the one that's going to be the very serious one, where I'm anticipating this is the one that really has a very big rally. Another one was that I talk about rotational aspects, and this is a rotational aspect to the extent that there's a chance that fund managers are going to look at whatever they think is working right now to put money to work. So if something is acted as there's been a retracement in what once was a weak sector, and it's actually holding in this particular period, I think fund managers are going to say, hey, we can put money to work over there because they're holding up well. That's really what we're talking about. And then the third one was to add to a position we have, and we haven't got it yet. I wanted it on a pullback. I should have said before 11 o'clock. We might get it before 1 o'clock. I actually really wanted it before 11. I'm not that interested if it closes at the low of the day. We'll just barely get it because it had a fabulous run earlier on. It's pulling back some. So that's the position. But adding to the shorts, I didn't add to the short side today. I needed the test of strength. Now we've got a test of strength. It's really a test of strength failure. Now it makes me a lot more comfortable about certain positions, certain add-ons I want to make, certain takeoffs that I want to do. Okay, so now let's go to gold. Gold is having, here's a question. The first question was, where's the E-mini going? E-mini, I believe, is going to lower lows and lower highs over this particular intermediate term sell from the September 26 high. So that's my look. Gold, this is a very nice engulfing candle. If you look back in history, you'll find that when it's successful, this particular cover of the previous 3, 4, sometimes 5 or 6 candles, when it succeeds, there's this particular mannerism that I look for, a character extension of the, let's call it an engulfing candle. The day's still young, anything can happen, but at least for now, an engulfing candle. Gold is up $15. When last year, anybody say gold is up 50 and the future's up $15 at 12.57? Well, it made a low today under 12.40. It went to 12.38.80. Let me type that in because it's important. 12.38.80 today, the 3rd, and it's running. It's at 12.56.90. But what's interesting is that the weekly chart has finally gone under the previous low. That was the low back in December of 2017. And my rule of thumb is in the arch formation, if you take out the left side low bar of importance, it's usually the core bar that's sort of the whole move of the arch, it needs to close above that low within 2 bars. So that's 2 weeks. Well, last week it went under it. It closed a little bit above. This week it went very much under it, and that low that in that particular instance was at 1254.46. We've already gone to 1238. So this is very important. Why? Because if this candle's successful, the on-balance volume and the stochastic should turn. The stochastic's at 7%. That is really low. And that should help some kind of a bounce. 2 things. One is one candle doesn't do it. You need follow-up. So this I'll discuss with my subscribers because I was going to go long this morning. The GDX is the position we often like to play. The GDX, which is trading at up 41 cents at 22.49. But there's 2 characteristics that I'm looking for. I didn't want to get in early because we're still long the dollar, and I don't want to mess with my head. My head says the dollar is still holding really well, even though it's down 22 cents today. Holding well, but this particular pattern that's formed right now, in fact, it almost looks like a Chapman wave oval. This is a stalk leg formation. Says, hey, there are a couple of things here. If the dollar index at 94.63 down 22 cents is able on the upside to close above 95.60, that'll be very positive. But if in fact it's, I don't know what the letter is, I've got a peak B here, almost a double top peak B, and the technicals are sort of failing. If, in fact, it closes underneath the low that was made right here on the 26th of June at 94.17, that's negative enough to say, watch out, the 9-period moving average of 93.85, and then the 14-period moving average of 93.28 in the weekly chart are viable. They become magnets. But within the context of the MACD in the weekly chart, that is really strong. Stochastic's at 85%, and single leg A, you do expect some kind of a pullback after 5 months of really good moves in the dollar. So going to the silver, I'm going to show you something interesting. Silver is having a very nice move, nothing like gold. So what's going on? Look, Silver is an inside bar. It hasn't broken either the low or the high of yesterday. It's at 1605, up 0.21, up 1.39%. Gold is up 1.18%, up 14 at 1256. Couldn't make it yet above the 9-period moving average of 1259.4. And the big test is going to be one close between 1260, let's say, and 1266. That's the 9 and the 14-period moving averages. And then a close above 1272 sometime next week. Doesn't even have to happen this week, but sometimes next week. But it cannot take out the lows 1238.80. I don't want to be too fussy here. It really shouldn't close below 1252. 1250, that should be key support. But if you look at some of the golds, I'll go to my ASA, which I like to look at. That is a really nice move. There again, I was going to go long ASA at the open at 10.20. It's trading at 10.37 right now. Very nice candle, but the weekly chart says, hey, nice candle, but it's done this before. It's got to hold gains, and that's the most important thing. I'll be right back. Dow's down 8.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So if you're a subscriber, or if you would like to be a subscriber to my opening call, the webinar that I did about 3 weeks ago, something like that, I spent a lot of time talking about the tide. That my belief was that the tide had changed for intermediate term in the Dow and the S&P, and that we hadn't yet even got, we had pinpointed a turnaround in the Qs and the IWM, Russell 2000 and the Index 100, but it was the major tide that was going to be the debilitating factor or the helping factor. And if you look at what's happened, is that we've had a rollover in a cyclical manner, as you had, say, in 2000, when you had the Dow make its top in mid-January, 14th or something like that, and you had to wait until March before the SMHs, the semiconductor, and the S&P made their highs. That I'm not talking about the relationship now between that and the decline that I'm expecting. I'm saying tops are rotational. Bottoms are made like on the 6th and the 9th of March of 2009. They usually come in because the fear factor goes so high together that you get a climactic moment, and almost all the indices turn around on that day. Or you get something like October of 2002 and March of 2003, where the S&P made its low later and the Dow made its low earlier. You can rotate in that manner, but one was the internal, one was the residual low. So, okay, let's get back to the nitty-gritties. If you want to look at some of the stocks, Tim wanted to know about ASX. ASX is down 4 cents at 450. This has been a problematic stock. I've looked at this very often. I don't know what it was ASX. Basil, where do you see an ABX? What is ASX? Because I haven't looked at that. ASX Industries. Okay. Sorry, ABX. I was going to say, how could that be down? Yep, this is up. This is in leg B, like my ASA that I was looking at. You remember the one that I like. This is very nice. Now, the question in the den is, Basil, you notice the gold stocks are a lot stronger than the metal. You know, it's been happening for a while. And when they do come back, it's only because gold is getting hammered. So ABX trading at 13.38. This is Barrick Gold, up 27 cents. So where do you see an entry? I'm going to say to you, Tim, because you watched this very closely, the entry was yesterday. Nah, I'm being serious. You asked me about it today. The entry is right here, 13.39. I would start a position. Here's the thing that I'm looking at, and I've seen this now on a number of charts. You see this narrow channel in the weekly chart? Narrow channel, right? It's like a falling axe formation. It needs very much to close, not to break above, like we take for granted. It needs to close above the weekly candle of the high of the 27th of April at 13.80. If it closes above, that's not only leg B in the weekly, it's a leg B in the monthly, and that means that the stochastic should 13.39, 13.89. That means that the stochastic at 59% right now should get to about the 65% area, maybe even 67. The stochastic needs to go a lot higher. But if it's now above the 9-period moving average and the 14-period moving average in the weekly chart, it means it's going to be a help to the monthly chart to improve. And the monthly chart is the big thing here. Why? Because there's a downtrend line, and I have a whole analysis formula that I use, because some people say, oh, it broke the down channel, the major long-term down channel, fantastic. No. Time alone can do that. Look, if you just keep moving out another couple of months, you'll break out of that trend line just on time. You need to close above it in a certain manner, and you need to treat that then as support. And where's the level? That's in the high 15s. So for ABX, I'm saying to you, start a position here. Let's see if there is a pullback in gold, if the dollar manages to run, or whatever it is. If there is a gold pullback, and it does affect some of the gold stocks, 1320 to 1310 is probably the area that has to be the big cushion. So I'm saying start the position. Let's look at it again, maybe Thursday or Friday. But this is the starter position. Now, the starter position for you could be just a nibble, or it could be half a position because you really want to put a lot of money into the gold stocks. I don't know. I'm just saying to you, for me, I like the action, but it hasn't broken this long-term 4 weeks, 8 weeks of sideways action in the weekly chart. Until it breaks it decisively, it could keep coming back to test the 9-period moving average at about 13.15, somewhere around there. So start your position, and then we could go from there. But in the meantime, I don't think I want to get too carried away, and that is with a full position. Why? Because if in fact gold, let me show you something very interesting. If gold, which is up 14, now it's up a little less, if suddenly gold starts to trade 2 bars inside the body of this candle, not the wicks, I'm talking about the body, that's just going to say, ho-hum, another failure pattern. So I'm just saying the gold stocks are actually reacting quite nicely. Will gold catch up? What will it do? This is the opportunity with this candle for gold to be moving by Friday's close, Monday's open, to be trying to move into the 1260s. Okay? Next question is VIX inversion, cash above futures, gone. Okay, I don't quite do that. I think Steve Rhodes is an expert at the relationship of the outer months. Bob, I think that's who you need to ask in his show. And let me just tell you about the VIX right now. This VIX has been a clue to me that the pullback that we've been looking at is a lot more serious than people think. Why? Because on a weekly basis last week, it held nicely above the 9-period moving average and the 14-period. That's the black one. I've got to change here. The black one is the 14, and the 200-period at 14.59 in the weekly as well. And that says to me there is fun buying of at least insurance. Let's treat it as not a position play, but more an insurance play. So yes, I hope that answers your question. And make it real simple. At 15.76, the high of the day, if the VIX closes in the 15, got another 20 minutes, up in the above 1570 today, that's just going to say, woo, a lot of insurance buying there. And if it suddenly turns down because the market's having a big spring to the upside, I can't see that happening. That's going to be important as well. So now let's go to the next question is XRT. I think there was a question yesterday, and I didn't get to it. XRT, this is the SPY S&P retail, made it. Oh, I must go through this. I got to read. I did so much work, and it's not lost. It's there, except it's in a different file. I don't even know how to find it. This is the SPY S&P retail, trading at up 37 cents at 48.84. Hey, this is very interesting. If I remember correctly, was it the RTH or the XRT? 50.98, 51.04 on the 22nd. 51.04 on June 22nd, 18. And it pulls back to 47s. So it's only 4 points, like 9%. But this is very important. I read an article today talking about the malls. You know that they project that there are going to be 25% vacancies in the malls coming up by 2022. Actually, I don't know how anybody can even be talking about 2022 right now. 4 years' time. Do you know what's going to happen in 4 years? You know what's going to happen in 4 minutes? The Dow's down 61. The S&P's down 6.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Okay, a bunch of things I want to go through. A couple of questions I had about Bitcoin. What I said to my subscribers is that I'm not having Bitcoin on my newsletter as a trade, and not in the Bitcoin fund, the GBTC. Why? Because I don't want that overnight risk. It's different to the future. It's different to having stocks and all that. The percentage move can just be really big. That's all. I'm not satisfied yet. It needs more maturity. It needs more time, and then I'll get into it. But I did say that I thought that Bitcoin could have a bit of a rally. Is it a tradable rally? I think it has a tradable component to it. This is trading at 10.01. I personally wouldn't be in this right now. I just don't think I want that kind of a risk. But I am thinking there's going to be a rally to about the 10.60, 10.80 area. And I do think that just at this particular time, with a lot of negativity over the last couple of weeks about Bitcoin, I think there's a chance that it rallies now just to alleviate some of that tension. So it has good support of the 975, 938 area. I just don't need that risk. I'm just saying, if you're interested, this is probably a time where maybe it could bounce. Later on, I'd like to look at it later on, meaning maybe many weeks or maybe a couple of months. I don't know. The next question I had was, Sarah wanted to know about the XAL. Let's go to XAL. This is the Arkham Airline Index, up a whopping 15 cents at 99.52, having just traded 124s in March. This is just not good action. This is leg D to the downside. Big arch formation in the monthly. I don't like this. And the IYT, yep, another question about the IYT. I think the IYT is telling me that there's a good chance that I'm correct in having my subscribers holding short positions in the Dow, the IWM, and the semiconductors at this particular time. Just mentioned the Den MU Micron got smacked to the downside, did beautifully early on. It was rallying above yesterday's high, and then boom, it's down 258 at 51.94. I think that the semiconductors are telling me that the fantastic, and my friend who I haven't spoken to for a little while, haven't had a chance, but who's in the semiconductor business, was saying that I think that last year they won't see that kind of incredible increase in business. He doesn't think for a long time. That's not to do with what. It doesn't mean they have to have a bad year this year, but the spectacular year last year. Some companies saw income gains on certain products in the semiconductor industry of between 60 and 80. Some people even 100% from previous years. That just doesn't happen. So anyway, I'm looking at it. I'm looking at technically. I have no idea what really goes on in that field. And the SMH has suggested to me strongly that there is a serious sell signal to sell mode in place in the daily. A sell mode has just begun in the weekly. And the monthly has this now an oval pattern which could turn into an arch formation if there is a break of the 90. What I'd said was, let's start with the 95s. If it goes into the 95s, that monthly chart is going to be hurt. I hope that answers a couple of questions I got there. Next question is, first half of July, more bullish than the second half. Where will the S&P SPX rally go? No, I think that today I'd say to subscribers, I needed today to see what's going to work and what's not going to work. In the context of what's going to work is if there was a very strong rally that held into the close, even though we're closing in 10, 12 minutes, it had to hold into the close. I didn't want to see an intraday Chapman wave trend gauge pop and drop. I wanted to see a holding pattern that was a good sustained rally with a really strong close. And I wanted it all around. I didn't want to just be either the Dow or the IWM. No, I wanted a full upward surge. And that would say we've got a whole week of rallying. This says to me, wow, just constantly be on your guard. Have your foot hovering over the brake, as we say. Goldman Sachs. Nothing to see here, folks. Just give it time. It'll be one of our plays. I just don't see it yet. XLF, same thing. I didn't finish my brief synopsis right at the beginning. So XLF down 20 cents, nothing to see right now. TLT, this is very important, up 62 cents at 121.97. I think and I contend that yields are going to be coming down as long as we see the market seeing lower lows and lower highs. I think money's going to filter out, migrate from equities, the insecurity of equities, into the so-called security of fixed income. Ironic as it sounds, that's what I think. So let's see what happens in the next. Yeah, I don't have the TU, I think it is. I just don't have it right here. That's the 2-year, so I can't do anything there. I wonder if I can go no, let's see. TU U18. I wonder if I can get anything. No, I don't get it. Okay. Next question was, so the first, I was going to say that to me, July is going to be one of the most important months. Look at the NYA, the New York Stock Exchange. The New York Stock Exchange, which is now up 19, was a much more, got repelled at both the 14 and the 13 period moving, 14 and the 9 period moving average. Now it's testing the 200 period moving average in the daily. It's got the lowercase h that goes to lowercase m that invariably tries to test the lows that would be down below 12,200. It's at 12,503 right now. I just don't see it. I think that something's going on here that's a little bit more important than what we've seen before. Yes. I'll look at it. The XLK. The XLK is trading at 69.49, down 60 cents. Tried to rally, had a beautiful, out of 4 sessions, it had huge, 5 sessions, huge red candle, then a lower green candle, but big, and then a red candle, then a huge green candle closing higher, and now a big red candle going higher and closing in the middle of yesterday's candle. This is not good action. And this is a peak G that we've got in the XLK, Select Spider Technology Fund. I have to put this in as an alternate count. I did change that on the when I did that the other day, but that's a different chart. So there it is. Yeah, I'm very cautious because I'm not saying crash. I am saying I'm cautious that I think upside is limited with lower lows and lower highs to come. So I think I've covered almost every question here. Oh, Bob, congratulations, Bob. Bob bought Roku calls. Bob from Framingham. I discussed this with him the other day, and I said on my show, I believe, I said I've got a peak F here in the daily chart. He had it as a D, but on a recount, I'm sure he got the same as me, an F. As long as it gets either a D or an F, that's where you've got to be careful. And it pulled back and went from the 47s down to the 40 area. That's what is about a 7%. No, what am I saying? It's about 13% correction, and now it's had a big spike up on some news. That news is not good enough news because it hasn't made a new recovery high. But Roku, I think, is in play. This is the alternative. I think you can use it for getting internet access to different things. Yeah, I think this is a very interesting stock. I've liked it for a long time. We owned it, I think, right at the IPO, and we got stopped out. Haven't had it since. But this is very important to look at. It's trying to hold quite well. I feel like, anyway, these calls he got out of his last calls, fantastic. I'll be right back. Now it's down 100.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Hi, folks. Stay tuned. Of course, the program here at TFNN. But this is what I wanted to say. Using techniques is very important. And this is what I teach when I do my analysis every single day for subscribers from Opening Call. I actually show the analysis, and I show what we're looking at: the arch formation, the peak Ds, the cup. Look how fascinating this is. If you go to the 120-minute chart of the E-mini, besides those peak Ds that are so important that I keep talking about, look at this, ESU 18. Look at this, the cup. The arch and cup formation, that's all you need to know, is that there's a pattern that I like to talk about called an arch or a cup, and how it unfolds like a sine wave is just fascinating. And it can do that for a long time, almost like a within a rectangle. That's what you've got in the E-mini. I discussed that about the 200-period moving average being the repellent zone. These are things I like to discuss, and I talk about it, and I discuss it in my it's a one-way discussion, obviously, because it's me telling subscribers what I'm looking at, but I'll just show you right here. For instance, what is this? Like here it is. This is the E-mini. This is what I showed this morning. See the pattern? I discussed the arch formation peak T coming down, how important this 9-period moving average is, and the 14-period moving average, the lowercase h that goes to an arch in the weekly chart, 120-minute chart just alternating between arches and cups and arches and cups, and now maybe we're starting another arch formation and a peak D. And I said it's really important to watch the 200-period moving average. Move this away. What did we see? Yeah, the 200-period moving average became a repellent zone. And that's what I like to do. So this is for my subscribers to my opening call, and hopefully they're satisfied. I do the very best I can, and a lot of detailed work. So with that said, have a wonderful 4th of July. And I'll see you back here on Thursday. Check out my opening call. I hope you find it very, very helpful. That's the most important thing. And certainly, I hope you find it profitable. That's even more important. So I believe you're going to go to Steve Rhodes right now. I'm not sure if he has the afternoon off, but I'm going to say Steve Rhodes coming up. And, of course, you've got Dave White, Tom O'Brien. Have a great, great day and a wonderful 4th of July. I'll see you back here on Thursday. Basil Chapman signing off, author of The Opening Call, my daily newsletter, and the Tiger Group.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.